Welcome back. I'm Pratap here. Today is 23rd May 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement. Please, if this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel, click on the community tab and then you will get access to this post. This post is having a YouTube link, playlist link that will take you to the training videos. Just click on this link. I'm clicking on this link. Now we get into the playlist supply demand zone price action course. So in this playlist we have all the training videos are available. You please scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we'll provide in that channel. Now let's get into the high liquidity zone analysis. Yesterday we identified 4 high liquidity zones and a few zones are already violated. We know that they are violated, but one zone, a valid zone, that is Asian Paints, which is stopped out. It is stopped out and immediately again it came back, but by the time already it reached your stop loss and including even whatever the stop buffers you added, even the stop buffers also it crossed. But how we fine tune this zone, that is very important. We have a drop, 3 base candles and again a drop candle. And in this you need to fine tune with the 15 minutes time frame. Let us check the 15 minutes zone. Here you have a 15 minute zone. You have a drop candle, you have 1, 2, 3, 4 base candles and again a drop candle with pro gap. So it's a very good zone looks like. And within this area again we fine tuned with 5 minutes time frame. Let us look into this fine tuned zone. We have a drop 1, 2, 3, 4 base candles and again a drop candle with pro gap. So this is an excellent fine-tuned 5 minute zone. Definitely we can plan a trade in this zone. Absolutely no issues at all. All the things are very favorable to us. Here you can't draw a zone because a drop, base drop, this is already violated. I have seen some of you drawn a zone like this. Drop these base candles and a drop. This is wrong. This is not a valid zone. So let me show you why it is not a valid zone. If you draw the zone will be like this. This is not a leg out candle. One reason is it is a medium size. Maybe you may expand and you can say, okay, I can compromise and draw. But still, where is this candle? This candle is inside the zone. See, the candle should come out of the zone like this. See, this is a drop, base, a drop. This is a valid zone. But this is already violated. That's why we didn't draw. Your candle should not be part of the zone. It should come out of the zone. Leg out should always come out of the zone. Remember this rule. I repeat again, the leg out should always come out of the zone. Otherwise it is an invalid zone. If at all, if you took a trade in this zone and it gave you profit, maybe it is a lucky trade for you. Such kind of zones never work out every time. Today it is a different scenario. Why it is worked? Not because of this zone. There is another reason. Let me explain that today. You felt like maybe you got a trade, you got a good profit, Everything is just luck today. You have to understand that. Definitely luck favored you today. Not because of this zone. There is some other reason behind. I will tell you. Please remember, this is an invalid zone. You cannot draw a zone like this. And moreover, these candles also not leg out candles. They are the medium size candles. So this is okay. This candle you can accept. Just maybe a little bigger than medium size, or maybe this is within the medium size. This could be a bigger candle. Even if you consider this as a leg out, this leg out will be part of the zone. When it is part of the zone, it is not at all a leg out candle. The medium size candle, you are included as part of the zone. That is the way you should consider. Then you may ask a question, can I combine all these candles, a drop, base candles and drop? This is a drop candle. See how many candles will be there in the base. 1, 2, 3, 4, 5, 6, 7. That way also it is invalid. Okay, anyway. And today what happened? Prices entered into the zone. But it is not good enough to hold. And it is, see, the prices came to the distal line and then prices moved down, again recovered back, came back and hit the stop loss. See, at the distal line, slightly pierced. After that, see how the prices were coming down, it came down, but they didn't reach you the target. Immediately, with a gap up. It's not gap up. There is a huge rejection from here and then moved up, and the zone is violated. But the zone is violated. Let me delete this fine-tuned 5-minute zone. Now, institutions created a new zone. Rally, 3 base candles and a drop candle. A new 5-minute zone is created. Where it is created? In the fine-tuned 15 minutes area. And this fine-tuned 15 minutes area is inside the 75-minute zone. Let me show you from the 75 minutes time frame. Now you will get clarity how exactly the new zone is created. See here, the 5-minute zone is inside 15-minute zone. This 15-minute zone is inside 75-minute zone. During the live market, this zone is created. See, after that we got the trades. The prices entered and again came down. Multiple entries it has given this zone. Let me go to the 5 minutes time frame and I will show you. This was the zone created during the live market. After that we got the first entry at 12:35 and it gave you around 4,000 rupees profit. Again it gave another entry at 14:25 and again it gave you close to 4,000, not exactly 4,000 but close to 4,000 profit. Again it has given. Again third entry it has given while closing the market. Then again prices came down but not up to the 15-minute zone. Because the last half an hour or closing hours, mostly we don't take trades. But even if you take, your target should be up to 5-minute zone only. But anyway, here there are no proper 5-minute zones also available. But these two are valid trades. Both these zones. And moreover, a lot of strong supply has been created in institutions. Your trade is stopped out. No doubt in that earlier fine-tuned zone. And this one worked very well. See the 15 minutes target. I am changing the time frame. Here you have a drop candle, 3 base candles and a rally candle. This is the 15-minute zone. See, it picked up the orders from the 5 minutes fine-tuned zone and reached the target. And once again in the next trade, it picked up the orders from this fine-tuned 5-minute zone and again it gave you. During the intraday, You can take multiple trades, no issues from the fine-tuned zone. But it is looking very strong. But unfortunately, you cannot take any of these trades because there is no RR. They are successful, no doubt in that, I will agree. See, they worked very well. But because RR is not there, you would not have accepted these trades. And not only RR, see the risk. The risk is very huge risk. Probably it will be beyond your the 2% risk. Probably you have to accept 3% risk you have to accept. Or 3 or 4%. I think around 3.5% risk is there. You can't accept that much risk. Maximum acceptable risk is 2%. I am saying the risk calculation based on one futures margin cost. If anybody wants to take cash trades, probably you can take only by doing position size you can take. That way you would have got some successful trade. And definitely you can't take trade in this zone because probably you are nearing to your broker's whatever the limit they are giving during the intraday. Probably by 230 or 245 they will be. You should not trade intraday trades for short trades or even long trades. Okay, 1245 candle, it reached the target, that is okay. But this could have been a successful trade if you are using position sizing. But even position size also that much risk, who will really wants to take a trade. Even if you do position size, a very small profit you will get for a big investment. So that's why what I am trying to say, definitely you would not have taken these trades due to high risk management. So the earlier stopped out trade in Asian Paints, it has given 1,360 rupees loss. As per one futures margin, I am calculating as per one futures margin, which is negative ROI 1.3 minus 1.3 negative ROI it has given. On your total capital, this was our loss. So this is about Asian Paints. And next remaining stocks, let us look into the one by one. ABC Capital is a 75 minutes demand zone. This is a 75 minute zone. We have a fine-tuned zones here. How I fine-tuned, let me explain. On 15 minutes time frame, we have a drop, 2 base candles and a rally candle with some gap. The hidden body you will be adding a little because there is a pro gap area is there. Drop. So this is one 15-minute zone. This leg out is okay, but this is slightly smaller than the expected. That's why I didn't draw the zone here. But even if you draw, even if you consider this, it is already pierced. So that's why not focused on this area. So earlier it picked up the orders from this 15-minute zone. And apart from that, the newly created one, we have a drop, 3 base candles and a rally. This is another 15-minute zone. These are the 2 valid 15 minutes order flows are there. And inside again you need to fine tune with 5 minutes time frame. Let us start from the bottom one first. See here you have a drop, base, rally is there. And again you have another rally, base, rally is there. See here, why I have drawn this. Actually, this is a bigger one. Even if you draw a zone like this, see, the candle body came out of the zone. Let us assume this candle is closed inside the zone, then it is not a valid zone. Always leg out should come out of the zone. At least a considerable body, a minimum body should be there outside. If it comes out of the zone and body is also very close to the zone, again, such kind of zones don't take any risk. A good move should be there. The rally move should be visible clearly. Draw wick to wick zones. If the body is coming out of the zone, at least a considerable amount of the body coming out of the zone, then you consider that as a valid zone. If entire candle is part of the zone when you draw wick to wick, don't take such kind of zones. Maybe in 15 minutes or maybe sometimes at 15 minutes time you can compromise and you can draw if the follow through candles are there. At the time you can draw the zone up to this type 2 proximal. You can compromise and draw, but you should identify a proper fine-tuned 5-minute zone inside. But 5 minutes you cannot compromise and draw the zones. That is very dangerous. If follow through candles are there. So that's why you should be a little careful about while drawing the zones. So that way we got 2 order flows here. And both these order flows are fresh zones. They haven't tested. And here you have again, you can consider this as a ERC candle, failed ERC candle. This you can use as a leg-in. You can consider as a rally candle. You have a base candle. Again you have a rally candle. See, I have drawn wick to wick. A considerable amount of the body came out. There is no doubt this is a bigger candle. It is a rally candle. But the body has come out of the zone. That's why it is a valid zone. If entire candle, leg out candle is coming inside the zone, that is not a valid zone. You have to remember these points. I remember previously also I told these points in one of the earlier high liquidity zone analysis videos. But still you guys are making some mistakes. So please be careful. Such kind of zones won't work every day, every time. That's why the price action you should observe very carefully. Anyway, in ABC, Aditya Birla Capital, you didn't get a trade today. And next one is, Asian Paints we already discussed. Next one is Axis Bank. This is also a 75 minutes high liquidity zone, but it is a supply zone. We have a drop, base drop. See how easily it is violated. But we identified this zone will be violated. The price structure is not at all good. Completely the zone is violated. But that didn't happen in Asian Paints. Because the price structure is good. That's why institutions, again they created a new 5-minute zone today. But we didn't take because of the risk point of view. But otherwise that's a very good zone. Gave good number of, today see we the 2 successful trades the zone has given. But this one, the completely zone is violated, but we know that. How? Go to the 15 minutes, you get some clarity in the 15 minutes itself you will get. But still, okay, we can draw a zone. We have a drop candle, 2 base candles and again a drop candle. This is the way we have drawn. But the structure itself is not looking very comfortable. But still you go to 5 minutes, you get clarity. But see, look into this zone, candle leg out. This leg out came completely out of the zone. There is a considerable body is there outside. That is what you have to understand. If entire candle is there inside this zone, you won't call this as a zone. Inside a zone, leg out should not be closed. Okay, now let me go to the 5 minutes time frame. See, you have a drop candle, you have a drop candle. Where are the base candles in between? That's why it is an invalid zone. There is no institutional order flow in this zone. When there is no institutional order flow, see what happened to the zone? Easily it is violated. See, sometimes the institutional order flow, good order flow will be there, still it will be violated. Why? Because there the reason is different. There the reason is maybe that demand could be very strong. That is what happened in Asian Paints. That's why the zone was violated, but later again, the bears created a new supply zone with a heavy order flow and pushed the prices down. That's why that zone holded the prices the whole day. Even though the demand is strong, still it didn't let the prices go above that zone throughout the day. But such kind of only such kind of scenarios our stop loss will hit, and we have to accept that. Such kind of things won't happen every time. Once in a while, maybe once or twice in a month it will happen, such kind of things. That day all our analysis will fail and your stop loss will be hit and you will accept. But the remaining days you are enjoying the profits, right? Next one is ICICI Bank. This is also a 75-minute zone, supply zone, high liquidity supply zone. See, easily this zone is also violated. Why? Because the structure is not good inside the 15 and 5 minutes time frame. See the drop, 3 base candles and again a drop. This itself, some discomfort is there for this price structure. And we got clarity once, sorry, this is 25 minutes. Sorry for my mistake. This is a drop base drop. And in 15 minutes time frame, see here. See the price structure. We have a drop 1, 2, 3, 4, 5, okay. But see the candles movement and all, it's not at all convenience. And the moment you go to, but anyway, we have drawn, even though you are not comfortable, for fine tuning point of view, okay, it is valid, we have drawn the zone. The moment you go to the 5 minutes, you get the clarity. See here, drop candle, again another drop candle, there is no base candle. Almost ICICI Bank and Axis Bank, both their structures almost looking similar. They are identical. Easily this is also violated. We know, because we know when a zone will be violated, that's why we are always identify such kind of structures and we don't take trades. But there are many supply demands on price action traders. They are not aware of when a zone will be violated. At least 80% scenarios we are in a position to accurately predict when a zone will be violated. 80% scenario. And 20% scenarios it is not possible for us, because institutions may create a new zones, again push the prices down. Like what happened in Asian Bank today. But anyway, Asian Bank structure is good. There is no doubt in that. But when having such kind of bad structures, institutions may create a new zone and push the prices down. At the time, next retracement, the new zone will give us trade opportunities. Anyway, those scenarios we will discuss in our next training lesson. Because many of you are ignoring such kind of scenarios, that's why I made a separate lesson on that. That is a dynamic zone creation. So these are the high liquidity zones we have generated yesterday. Only one stock is triggered, and it gave us it was stopped out. That is Asian Paints. Remaining zones they were violated, and one zone we didn't get the entry. That is the ABC Capital. So this is about our HLQ analysis generated from our previous report. Hope this information will be helpful to you, especially those people who are drawing leg out candles inside the zone. At least this will be a learning point for you in today's session. So let's all meet again in our next video. Thank you.